Hey, folks. Welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, May 3rd through Friday, May 7th, 2010. Well, folks, here we go. Another weekend analysis update. I want to cover all the bases in regards to where this market could be headed next week. A volatile week last week, following multi-weeks of gains previous to last week. Now, overall, there's some big things we need to be looking at. First of all, last week on Tuesday, we got confirmation. Then we got a little bit of a rebound, but as long as confirmation was in there, you looked for more downside. That's exactly what happened on Friday. Friday, the markets got smacked to the downside, down 159 points on the Dow, NASDAQ down 51, and the S&P 500 down about 20 on the day. That's 1.5% to 2% across the boards. And again, you can see on the chart right in front of you, this is the SPY 10-minute intraday chart, giving us again the general, each candle again being 10 minutes and the angle of the market to the downside. We closed at the lows of the day. Volume was pretty solid on Friday as well, 270 million traded. Now again, that's very important because the day before, which was Thursday, we had that nice up day. We gapped up and had a nice move up into the close on Thursday. That we only did about 170 million. So you can see 100 more million traded when heavier volume is around. And that's one thing that In the Money Stocks and myself have told you guys from here on out. Again, always remember, heavy volume means downside in the markets in general, all right? The heaviest volume days are going to be the downside because right now, over the last really 3, 6, 9 months, you've seen lighter volume in the markets and the markets have gone up. That's telling you the markets are going up as the amateurs have been loading the boat and the institutions have just not been selling. When volume picks up in this market, it's because institutions continue to unload and unwind their position. Smart money, again, leading the charge, folks. You always got to look for where smart money is. Now, overall, the weekend, guys, hard sell on Friday. What happened over the weekend? Well, we have an aid plan for Greece worth about $145 billion. That's from the IMF and the Eurozone. So, again, bailout in the works for Greece here. We've heard about this for months on end, it seems. But overall, things are coming to a boiling point. We heard last week Spain, Portugal on the brink as well. And this is the big thing, guys. All right, so you bail out Greece. Who's next going to be bailout? Are you going to bail out every country in the Europe area or in Europe to kind of give everyone a bailout, a free pass, or everyone that needs it? Now, there are going to be a couple countries that don't, like Germany probably will never need it, but overall, a majority of them do, and do you have enough people willing to bail them out equal to enough to do the job? And that's really going to be the big question going forward, as the next shoe to drop is probably on the horizon. Now, also here at home, we had a big event. There was a car bomb placed in Times Square in New York City that could have a little impact on the market, maybe a little bit of jitteriness overall. Again, nothing happened there, thank goodness. It was diffused, but nonetheless, that is going to play a part in early in the week, probably coming in on the futures tonight when they open on Sunday night, and then again, coming in Monday morning. You want to see how the futures react to that. All right, so that's going into the week. There's nothing else that I'm seeing. Keep an eye on the dollar. Keep an eye on Asia. Keep an eye on Europe. All of this global kind of unrest, guys, is very important because it all brings in the whole aspect of propping the dollar up. And the more worry there is globally, the more the dollar will rise, especially against the euro there. And that obviously has an impact, a negative impact on the markets. Now, looking at the charts here, you can see, again, Friday we had a little bit of a flat open. Then we sold sharply right into a major gap window. Gap window was a beautiful bounce. Nice little bottoming tail. You get a bounce all the way back to the confirmed level. That's your shorting opportunity. Market trails down, breaks through, second hit you're going to break through, comes down into the gap fill. Gap fill, you get a bounce. Then you come down here, pause at gap fill again, and dump out into the close. Notice if you take this line, connect it to this line, and then it connects right to the low there on Friday where the market's closed. Technical trend line analysis is number one here, folks. This is stuff we teach in the research center, stuff we teach in the chat room all day long. You want to be involved in that nonetheless and start making some profits. In addition, if you take the high pivot from Friday and connect it through this pivot, you can see it's basically a channel developing high to this little area right in here. And again, notice how this line here is parallel to that line. That's the symmetry of the markets at work. And on Monday, should we rally up, this would be resistance then. And you could just go resistance, support, resistance up here, support down here, and so forth. All right. Now that's again what we're seeing here. Overall, into the close, you don't have any major pattern. You really have a falling knife type thing going on here. So it's not telling you where the markets necessarily will open on this chart. We can look at the 60-minute to find out. And the 60-minute really tells us more about the whole week as a total. Now, what's so important about this chart? As you can see, this was a major breakdown line. I highlighted this to my Premium Research Center subscribers over and over again. I said, when you get below this level and confirm, you'll have some downside. Then we confirmed here, went to the 200 moving average. Then you rallied up, got it back above it. You broke it again, had another sharp sell, and now you're back below the 200. Now, you haven't confirmed below the 200, so that's something we need to watch for on Monday. If you confirm below the 200, you should drop steeply again into this level, the 117 level. 117 is going to be the big level on the SPY that you should be watching for major support. And that only is a possibility, and I repeat, this is only in play should you confirm below the 200. If you don't confirm on Monday on the 200 and you bounce back up, that is off. Then you look for neutral to positive bias. If you confirm below the 200, you will drop sharply and continue on your way down to that 117 level, 117.50 level, all right? Very important. And again, these are kind of the nuances of what we teach in the Research Center on not only giving guidance, giving calls, and again, huge week last week in the hot charts and alerts across the board on plays and calls and profits. But again, the teaching aspects, what we like to do more than anything, give you guys a real read on how to analyze all charts across the board, not just the ones that we do as well. All right, so that's the 60-minute chart. Again, it all comes down to where we start on Monday, whether or not we're going to see a little bit of a bounce. You're going to watch for confirmation. Again, if you don't know what confirmation is, join the Research Center. Now, let's go to a couple other charts, guys. Goldman Sachs, one of the big culprits on Friday and last week. And again, you can see the big drop here. Then you consolidated, went sideways. Then another big drop here. Goldman Sachs was down about $15 on Friday on the back of a possible criminal probe now, not just civil. Civil, again, means just money. Criminal, you could possibly have jail time and even more issues there. So, again, very bearish on Goldman. That really started the selling. You add that into the whole Greece situation. Then, again, that caused the markets to roll over in a major way. Now, Goldman Sachs, what are we looking for here? Let's go to the daily on Goldman Sachs. Here was a key level. You broke that level, folks. That level got taken out. Now what you have to do to find your next level of support, what you need to do is shrink the chart down just a little bit here. So we'll shrink it down. And what you next want to do, I see a little bit of a level right here. Look, notice how the tail was below it. So again, we can erase this when that one got broken. There's a little gap window right here at the 145 level. Notice how we bounced back above that. Now again, if that should break, this is your ultimate target on Goldman Sachs for a swing trade long position, in my opinion. You're looking at the 136 to 137 level as being the key level for a long swing trade should you get there. Now you still have to drop about $7 more just to get in that range on Monday. I'm not sure if that'll happen on Monday. Probably eventually it does. But again, that will be your key level to watch on Goldman Sachs. JP Morgan, look at this nice little drop on JPM. And by the way, JP Morgan was one of the big swing trades we called out this week. We nailed it right here. And this was on the hot charts and alerts. So Research Center subscribers all got this one. And again, notice how you fell into this trend line from connecting high pivot to high pivot. Gives you this level plus the 200. When you have two major moving averages or two major lines connecting right there into price, it's going to be about a 90% success rate of a long play in the market. Sure enough, off those days, we had a $2 bounce on JPM. We said take the money and run. That was the dead signal on Thursday. We said to take the money, and sure enough, that was worked out beautifully as Friday it catapulted to the downside again, touching that level. Now, if it takes out that level, your next level to watch is going to be right here at 142, and at $42 right there. And then if you get through that, this is going to be your major level. See pivot high right here to here, and that is going to be your big spot at $41.30, $41.25. Now, a couple other stocks. Apple Computer continues to be a crazy stock here, still very overbought, but had a nice down day, down about $7.50. Google was down $6, and Research in Motion down about 90 cents. Now, going over a couple key things here, guys. When you're going into next week, this is what you need to know. The unemployment report is going to be on Friday. There's a lot of economic news, a fair amount of earnings, but again, not any major earnings really left. You have MasterCard next week, and you have a few other big ones like that, but that's not a major market mover overall. But the key is going to be, again, on Friday of this week, non-farm payrolls and the unemployment rate. Everyone is going to look at that and see exactly what that means in regards to where this market is going. How many jobs were created? Everyone expects there's going to be an increase in jobs, but is the unemployment rate going to drop? Is it going to be a major increase in jobs or just minor? Overall, other than the unemployment number, next week you're all going to be just watching Greece. Watch Greece. Watch Asia. Everything globally is big right now. You got to keep an eye on that. Goldman Sachs as well is going to be a big play. Those are going to be your watches for this week. Well, come join the Research Center. Come join the chat room. We're going to have lots of winning trades, lots of profits this week. I'll see you there. Take